What is going on, everyone, and welcome back to Explain the Charts. Today, October 8th, 2025, we are diving deep into Intel Corporation, ticker Intel. The stock has seen some absolutely massive moves recently, fueled by a whirlwind of both incredibly bullish news and some serious underlying concerns. In this video, we'll break down all the latest events and then connect them to what we're seeing right here on the charts to figure out where Intel might be headed next. First, let's talk about the fundamental catalysts driving this stock. The news cycle for Intel has been overwhelmingly positive lately, which helps explain the powerful rally we've seen. A huge event was back on September 15th, when the company announced the sale of a majority stake in its Altera business and a significant cost-cutting initiative. Investors loved this move, seeing it as a sign of strong financial discipline, and the stock surged over 5% on the news. This financial strengthening was further bolstered by a massive influx of capital. In August, Intel secured a $2 billion investment from Softbank for AI research and development. On top of that, they received nearly $8 billion in funding from the U.S. CHIPS and Science Act to expand domestic manufacturing. These investments are crucial for Intel's ambitious IDM 2.0 strategy. The AI story is perhaps the biggest driver here. Intel is aiming to ship over 100 million AI PC units by the end of this year, and their new Panther Lake chips are set to launch this month. This puts them directly in the center of the AI boom that has been lifting the entire tech sector. Adding to the bullish sentiment, Deutsche Bank recently raised their price target from $23 to $30, citing these strategic moves. However, it's not all clear skies for Intel. It's important to note that Deutsche Bank kept their rating at a hold, suggesting other AI plays might have better risk-reward profiles. Zacks also published a piece just 2 days ago asking if the stock's incredible 88% surge in the last 6 months is a mirage. They point to significant headwinds like intense competition, margin pressures from shifting production, and the ongoing risks associated with U.S. export restrictions to China. Execution risk, especially in their new foundry business, remains the big question mark hanging over the company. So we have a classic battleground scenario, a compelling turnaround story fueled by AI and fresh capital versus legacy challenges and fierce competition. Now let's see how this narrative plays out on the daily chart. Looking at the big picture for the past year, the price action tells a dramatic story. We saw a brutal sell-off in late July and early August, where the stock cratered from over $30 all the way down to a low below $19. That low around $18 seems to have been the capitulation bottom, marking a major reversal point. From there, we can see the start of this incredible 88% rally that the news articles have been talking about. The recovery was steady at first, grinding its way back up through the low 20s. A key resistance level was clearly around the $25 mark, which the stock struggled with throughout late August and early September. Then, on September 18th, everything changed with this massive breakaway gap. The price exploded from a close near $25 all the way to an open above $31, a move triggered by that positive Altera and cost-cutting news. This gap is now a critical technical feature on the chart. The entire zone from $25 to $31 will now act as a massive area of long-term support. Since that gap, the trend has been decisively bullish, with the stock carving out a series of higher highs and higher lows. The most recent peak was hit just a few days ago, right around the $38 level. This $38 area is now our primary overhead resistance. Let's zoom in on the price action since that huge September gap up. As you can see, after the initial surge to above $32, the stock rallied hard, reaching over $36 by the end of September. It then experienced a healthy pullback to the $33 to $34 range, which was successfully defended by buyers. This successful test of support gave the bulls the confidence to launch the next leg up, pushing the price to the recent high of $38. This pattern of strong rallies followed by orderly pullbacks is characteristic of a powerful uptrend. Currently, the price is in another consolidation phase just below the $38 highs, potentially gathering energy for its next move. To get a better feel for the short-term battle, let's switch over to the 1-hour chart and look at the last few trading days. Here we can clearly see the peak being established around $38 on October 2nd and 3rd. The pullback that followed found very clear support right around the $36.50 level on both October 3rd and again on October 6th. This $36.50 level has now become a critical short-term support pivot. A hold above this level keeps the immediate bullish structure intact. Yesterday, October 7th, we saw a solid bounce from this support zone, with the price rallying back above $37. This suggests that buyers are still active and are defending the recent gains. The key short-term resistance is, of course, the prior high near $38. We're essentially trading in a range between $36.50 and $38 right now. Drilling down even further to the 15-minute chart, we can see the texture of today's trading. The price has been in a tight consolidation for most of the session. It's coiling up, building pressure for a breakout. A move above the session high would be a bullish signal, targeting that $38 resistance. Conversely, a break below the session low would put pressure on that critical $36.50 support level we identified on the hourly chart. Alright, let's switch back to the daily chart to recap and look ahead. The story here is one of fundamental turnaround meeting powerful technical momentum. Your key levels to watch are straightforward. To the upside, immediate resistance is the recent high around $38. A decisive break above that opens the door to the psychological $40 level and beyond. To the downside, your first line of defense is the short-term support at $36.50. Below that, you have secondary support around $34.50, and then the major support zone at the top of the gap around $32. So, what's next? I see two main scenarios playing out. The bullish scenario, which I'd give a 70% probability, sees the current consolidation resolve to the upside. Fueled by AI hype and the upcoming Panther Lake launch, the stock breaks through $38 and continues its uptrend towards $40. The bearish scenario, with a 30% probability, would see the stock fail at the $38 resistance. A break below $36.50 would be the first warning, and a slide below $34 could signal a deeper correction, potentially to test the top of that gap at $32. This could be triggered by any bad news regarding their foundry execution or a broader market downturn. Keep a close eye on any news related to the Panther Lake launch this month, as that will be a major catalyst. And as always, please remember that this is just my analysis and opinion. This is not financial advice, and you should always do your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.